Welcome back. Africa's economic landscape is being reshaped by political transitions, policy shifts, and the redirection of global capital flows. RMB has released its latest Where to Invest in Africa report, spotlighting how African nations are shifting from dependency toward resilience and self-determination, with a renewed focus on sustainable growth, regional collaboration, and private sector participation. To unpack that, what that means for investors eyeing opportunities across the continent, we're joined by Samantha Singh-Jami, Head of Africa Research and Strategy at RMB. Samantha, thanks so much for your time this afternoon. Let's get straight into it. Now, the team has added new factors to the index this year, particularly around the methodology. How have the changes influenced the rankings, and what do they reveal about Africa's evolving investment landscape?
Okay, well, thank you for that, and thanks for the introduction. I think on the Where to Invest, obviously it's the second edition with a relatively new methodology. So the global impact and the uncertainty that we've seen last year did play a role in this year's rankings to some extent. So let me just break it down. I think there's two parts to it. The methodology in itself is the same. We tried to do something very robust last year when we looked at how to develop the Where to Invest in Africa rankings. So it's still your 4 pillars and your 20-odd indicators. So okay, that remains the same. But where we are starting to see more themes evolve is around the aid and trade, as you said. So we've got a few things in the document that highlight export potential, showing that, South Africa has about $75 billion of exports that they could potentially do. Obviously, we can unpack at some point how these get done. And the other thing is the shift from aid to investment. And we saw that last year it was a massive year for sub-Saharan Africa, or broader Africa, the entire continent in terms of FDI flows. So there was about 97 billion coming through onto the continent. Granted that about 35 billion of that went to Egypt because of the Ras Al Hekma development. So yeah, we do unpack a little bit on the trade and investment leg that we are starting to see unfold.
And have you seen any difference when it comes to investment flows as we look at the broader macroeconomic picture, as well as this wave of protectionism that has hit the world as well?
I think the investment flows are also in two parts. There's your FDI investments, and when we look at it, some of the recipient countries or the large recipient countries are still the same. And I mentioned that there has been a super year for FDI. Granted, a lot of it was Egypt, but South Africa, Morocco, Egypt, Tunisia are some of the larger recipients of FDI, and that still stands. But I think where we're starting to see a little bit more of a change is, in the type of investments that are being made. Obviously, in some parts of the continent, there's still some energy issues, and you're starting to see a lot of focus in renewables. So you're starting to see that come through, especially in Southern Africa, where we've had lots of, drought due to El Nino. So from that investment landscape, I think, it's still pretty robust. From, a portfolio investor type of landscape, I mean, the domestic conditions, like your currency, the volatility around that, your interest rate cycle has played a role. And I think when you look at it from a liquidity perspective or international liquidity perspective, you do see that there is still a lot of appetite for investments to Africa in that respect.
And quickly before I let you go then, Samantha, it's been interesting that you say that the bigger economies like your Egypt and SA are larger recipients of FDI. But when you look at rankings, it's the smaller countries that are faring well. Maybe just take us through what's giving the likes of a Seychelles or a Mauritius the edge.
Yeah, so I think, when we looked at making or changing the methodology. I mean, the purpose was the ultimate rank is quite theoretical, and individuals definitely need to assess the index components holistically. So it also depends what you want to invest in. I think where the smaller countries or the islands, basically Seychelles and Mauritius, rank first and second for a second year, it's largely to do with less corruption.
Okay.
There's a lot of innovation that goes on in these markets. From an economy structure side, it's maybe a little bit better to some extent. Obviously, the size of the economies are very small, but I think in terms of diversification, innovation, relatively high levels of growth, it's still pretty good. So those factors do influence the overall rating for these countries.
All right, let's leave it there. Thanks so much for your time and taking us through that report, Samantha. That was Samantha Singh-Jami, Head of Africa Research and Strategy at RMB.